Welcome to today's Daily Report market analysis videos with me, Richard Perry, market analyst at Hantec on Thursday, the 14th of May. Risk aversion has really started to come into these markets now in the last couple of days. Equities are under pressure again. There was significant losses yesterday, similar moves today. We saw the S&P 500 sharply down 2 days in a row. This really does bring up the prospect of a top pattern now. We've been talking about how this rally has been rolling over in recent weeks. Yeah, it's sort of close to this top pattern completion. The futures, little bit flat at the moment, not really calling for that top pattern to be completed quite yet. But there is that fear that it could be happening. The dollar ticked higher. Well, it's actually been choppy in the last couple of sessions. It sort of rebounded into the close yesterday. They had this big speech by Jerome Powell talking about the US economy, suggesting initially that negative rates are not an option for the Fed at this stage. Certainly not at this stage, but they certainly don't want to use negative rates. And that helped to support the dollar. But also he was very cautious on the US economy as well. And there was, after that, there's been a safe haven flow as well. So that's basically filtered through markets, through certainly equities under pressure. But gold rallied quite hard yesterday and holding on to that gain as well. In terms of the oil price, there's an interesting sort of consolidation that we're still seeing on both Brent and WTI. A little bit of a tick higher today by, 3%, but still well within the realms of this consolidation. So nothing too significant yet in terms of direction. But in terms of the safe haven flows, you can see that Treasury yields have fallen quite strongly now. We've seen the 2-year just drifting a little bit lower, and that's helped to now mean that you're going to get a little bull flattening of the yield curve, yield spreads falling back on that flattening. And that sort of adds into the risk aversion that we have got. Now, in terms of where we're looking at today, we've got a couple of central bank speakers. We've got Andrew Bailey and Stephen Politz of Bank of Canada, Andrew Bailey being Bank of England. And the weekly jobless claims are the main data point for today. That is where we're at in terms of the key factors affecting markets today will be that jobless number, expected to be 2.5 million jobs. Now that obviously is a huge number, but in the concept of where we've been, which was over 6.8 million jobs, jobless claims on the late March period, we are still seeing this number reduce on a weekly basis, but still enormously high, and adding to the week millions and millions to the unemployment numbers. So that's this afternoon at 1:30. Okay, so that takes me on to my chart of the day, which is Euro sterling. Now, Euro sterling has had an interesting move actually in recent days. Started to swing high, and you can see that swing higher with a run of broadly positive candles. A little bit of a neutral candle yesterday with that basically flat close on the day, a bit of a doji candle. But you can see the momentum indicator really starting to go. RSI 56. That's the highest since late March. MACD as well picking up on a bull cross, stochastics accelerating higher towards positive territory. So it really is putting pressure on the top of this band, 88.65, sort of positioning for a test of that resistance. And if you do see an upside break of that, it really would open the moves higher again. You could see that certainly there'd be an initial base pattern target of around about 180 pips or so. So there is an upside target that you can really gain and see that the market moving towards, because there is this is the hourly chart. You can see this positive configuration you've got with higher lows and higher highs over the past few weeks forming, and the breakout above resistance levels within the old band is starting to happen, and that old resistance of 88.05 became supportive. 88.15, 88.05 seems to be a decent support area for this little near-term correction back. But you'd be looking at buying, I think, into weakness now, because sterling does look as though it's under pressure and is not looking especially positive at the moment. And the euro sort of holding ground, I think generally tends to suggest that euro sterling will be going higher. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos, and also go to our Trader Talks videos where you can gain some top trading ideas.